All right, hello and welcome to Camel Finance. I'm your boy Camel, and I wonder if we just had the catalyst to start this flush, to start this sentiment flushing reset that I've been talking about, this decline into the daily and weekly cycle low for the equity markets. That catalyst, of course, is that Fitch has downgraded the US ratings. You can see the futures currently not looking too good. So Fitch has downgraded the US long-term credit rating from AAA to AA plus for the first time since 2011. And here's why. First of all, we've seen the erosion of governance. Repeated debt-limited political standoffs have eroded confidence in fiscal management. We've also seen rising government deficits, which Fitch expects the deficit to rise to 6.3% of GDP in 2023, up from 3.7% as of last year. They've also said that general government debt rising was another reason, and they expect further increases in the debt to GDP ratio going forward. Unaddressed medium-term fiscal challenges, such as rising rates resulting in an increase in interest costs and tax cuts set in 2017, are set to expire in 2025, which should add political pressure. They have also said that the Fed interest rate hikes have put a lot of pressure on the US, and they are expecting to see one more rate hike by September, which adds even more pressure on ratings. Fitch have made it clear that the failure to address government spending issues and macroeconomic policy could lead to more negative revisions. So the USA just got downgraded. This actually happened back in 1999, and it's not good for the dollar. It's not good for already exploding deficits. Cost of debt financing is going to increase, and risk is therefore increased. So in summary, the US interest on debt is already nearing $1 trillion, and it's about to go a lot higher. There is little confidence in the US government. There's no confidence in US fiscal management. The downgrade is not a reflection of the United States' economic strength. The downgrades will lead to higher borrowing costs for the United States government as investors demand a higher risk premium to compensate for the increased risk of default on their debt. The downgrade is also going to lead to a weaker dollar as investors lose confidence in the US economy. The downgrade will have a negative impact on the US stock market as investors become more risk adverse, and the only solution is more money printing. As always, all roads eventually lead to more cowbell. Fiscal austerity is beyond the point of no return. And so again, I wonder if this is the catalyst now. I've been saying over and over and over again that we are getting stretched and late in the cycle, as Bob Lucas is showing right here. We have a 24-week average for a cycle low to form. We are now getting very late in the cycle. We have been very late in the cycle. And I wonder if this is going to be the catalyst to flush the sentiment, to force prices lower down. I think pullbacks, as I've said a bunch of times, will be contained to 5 to 10%. And most importantly, if this is indeed the start of a multi-week decline for the stock market, then our focus, or at least my focus, is going to be solely around looking for a swing inside the weekly cycle low time frame. And that is where I believe we will have the best opportunity to get long since the lows back in October. These weekly cycle lows typically come around once every 6 or so months approximately. So this is the best opportunity we've had for a very long time. I do believe once we get down here, we will have one of two scenarios play out, which I've been highlighting again over and over again. We should get a minimum of a 4 to 6 week rally, and that should be the worst case scenario, followed by a rollover. And if that's the case, we'll deal with that as it comes. But in the best case scenario, and I think the most likely scenario, is we will get a swing out of here and finally have a blow off top move to all-time highs before then we go full deflationary bust. As ever, one day at a time. But I really think if this isn't going to pull the markets down to that weekly cycle low, if this news isn't going to be the catalyst that we see a decline into that weekly cycle low on, then I really don't know what is. We still have to be open to just seeing some kind of little shakeout and then a reversal higher up into all-time highs and then a big pullback into that weekly cycle low. But personally, I think the time, it's one of those things, isn't it? Show me the charts and I'll tell you the news. The charts have been telling us a pullback was due for a while, and then right on schedule, we get the big news out of the US that Fitch is downgrading the US. So to me, the stars seem to align for this pullback. I'll be interested to see what comes over the following days and weeks. Bitcoin continues to do Bitcoin things, and the biggest Chad in the entire Bitcoin space, Michael Saylor, has just acquired another 467 Bitcoin for $14.4 million, bringing their total up to over 152,000 Bitcoin. They have entered an agreement to sell up to $750 million in additional shares to purchase more Bitcoin. At today's price, that would equate to another 25,700 Bitcoin. So Michael Saylor is not slowing down here. Tether, the company behind the USDT stablecoin, has acquired another $176 million in Bitcoin since March the 31st. So clearly Tether is bullish on Bitcoin as well. More good news in the Bitcoin space as the world's fourth largest accounting firm has concluded that Bitcoin is ESG compliant. And technically speaking, Bitcoin golden crossed on the 3-day chart has just occurred. And this has happened for the third time ever. Each time it happened, the bottom was long ago already in. And so you can see one here, and now one today tells us that better than expected outcomes are just around the corner for the price of Bitcoin. And whilst volatility is low, whilst Bitcoin has been slowly boring people to death, making them lose interest, every other time this has happened in history, we have seen massive upside for the price of Bitcoin shortly thereafter. I doubt this time is going to be different personally, although I probably think we have got to allow a little bit more time into that daily cycle low for Bitcoin. Taking a look at some simple TA, you can see 2013, we break out of the descending broadening wedge and we go higher. Same in 2016 and in 2020. And here we are in 2023, already broken out, already back tested, working our way higher. Is something like one of these parabolas just around the corner for Bitcoin? I think so. Of course, as I've been saying over and over again, we will find out once we get to that 60-day cycle low time frame for Bitcoin. For now, though, here's the dollar right into resistance. Can it break out? Can it pressure risk in the short term? Can it move higher as a result of investors dumping stocks and looking to hide and seek shelter in the dollar in the short term, whilst this kind of weekly cycle decline, this weekly cycle low flush out occurs? I think that's probably what we're going to see. But of course, as ever, it's a little bit too early to say that for sure. Given where we are in the cycles, it should be no surprise to you, as I've been saying over and over again, we are posturing defensive here. I've been posturing defensive and I have choked my stop up even higher, as you can see here, for the S&P 500. Any daily closes below this upward sloping blue support line and I'll be out of this trade. The NASDAQ, I've choked this stop up as well. I really don't see any reason to allow this trade to fall into a loss. So I've choked the stop up and we'll see what the market can give from there. I've done the same on the Dow. I've decided to take a shoot first and ask questions later approach here. Worst case scenario, I think I get shaken out. Maybe we'll find a place to re-enter. If not, then I don't mind sitting on the sides in cash. Even if the market's going to keep moving higher, I don't mind sitting out and missing out on a small portion of the rally, waiting for that cycle low flush, because I do believe that is coming. Heavily focus on Apple as it's going to close, or at least open, I should say, below this upward sloping blue support line. So you know the deal. All the while we're above the yellow, then I'll keep pushing this trade. But if we lose the yellow upward sloping support line on a daily closing basis, I'll be out of this trade completely. Tesla, I was saying yesterday, I wouldn't be surprised if we saw this out of Tesla. And it seems that perhaps that's coming. For me, the purple downward sloping resistance line is the trigger for longs. Until we can get above that, I'm not at all interested. Bitcoin looks like it wants to chop around, but I still think we've got to allow a little bit more time into that cycle low for Bitcoin. And it's at this point in time that I can get back to maximum aggression. I can add longs on a swing for Bitcoin, and we'll see what the market can give. Once we get down into this timing frame, that will be the last time for me to start adding to Coinbase and MicroStrategy and Riot, and of course Marathon. I will be adding there. I will be moving stops up below wherever that swing low forms for Bitcoin, and I will be assuming that we are going to continue in a bullish structure. If, however, the market proves me wrong, then I'll be cutting these positions, walking away with a profit, and going to plan B. Lastly, gold and silver, still doing a whole lot of nothing. If we can get above this downward sloping green resistance line, that's an add from me. And silver, if we can break out of this big red downward sloping resistance line that goes all the way back to the $50 mark back here, if I keep scrolling back. So if we can break out of that, I'll add along again. If not, we'll keep pushing these trades and we'll see what can happen. Overall, though, I think it's probably time. I think it's probably time that we see this flush. Do we get counter trend bounces on the way down? I would think so. Am I calling for the end? No. Am I calling for massive declines? No. Like I said, I think we'll have pullbacks contained to 5 to 10% on the S&P 500. But overall, as you can see, plenty of profit. I'm interested now in maintaining capital, in locking in that profit and making sure I don't get silly and end up going from very profitable positions into losses or giving back all of my open profit. I want to make sure I walk away with some money, having taken some money out of the market. So I continue to posture defensive. I continue to play cautious here. And if we can get this decline, which I think is likely coming now, I'm more confident that we're going to get this pullback after today's news than I've been in a little while. And if we can get that pullback, a couple of weeks of patience, and then we can go back to full bore bullish for that final blow off top portion of the rally out of that weekly cycle low. So a couple more weeks and we can also get long Bitcoin. And then I think it's time to really see just how berserk the markets can go into for this final blow off top portion of the melt up. Of course, if we can indeed get this pullback on the melt up chart followed by a big face melting rally to new all-time highs, I will be declaring victory. I will be ticking this one off and saying that was a great call, that was a great idea, and I'm going to declare victory at all-time highs. From there, of course, the big challenge will be picking the top, getting out of the top, and making sure that we don't just sell the top in case we continue to melt up. So we're going to have to make sure that we can clearly identify the top. The top may well come from lower down. We may well see a rollover from this neighborhood or here. There's no way of knowing. So for now, let's see if we can get to that weekly cycle low. Let's see if we can then get the blow off top and declare victory on this move. And if we can, then the big question becomes, are we really going to get that rollover? Are we really going to get Congress banned? Are they going to start to cut rates prematurely and by surprise? Because obviously that is not priced in at this current moment in time. And then do we finally start to look to this pink text down here? Is this what we need to be focusing on? Are we going to see a dollar bounce all the way up to 140? Are we going to get a massive QE bomb somewhere in the neighborhood of 10 or 20 trillion? Are we going to get a massive rollover of everything, including the dollar? And is the system going to be reset to CBDCs? Long VIX trade, we're looking forward to that. But as ever, let's not get too ahead of ourselves. Let's take it one day at a time. There's still a very good chance that we could just see a little pullback today and then it turns out to be a tree shake. So we'll see what happens. As ever, open to everything, and we'll see what the market can give. I'm your boy Camel. I hope you enjoyed this. Play safe out there. And in the meantime, look after yourselves. Take care from me. All the best. Cheers. Bye.